What's up, everyone? Today we're going to talk about getting pre-approved, what all it entails, what do I need to do, how do I get it done? It's too much work. No, it's not. We'll make it easy for you, starting right now. And I'm Bret, Wallace.
And we're
your Houston local guide.
Okay, so we're really excited about this video today. It's part of our Buyer 101 series that we've started because we've been getting so much great feedback. But before we get into it, go ahead, subscribe to our channel, hit that little notification bell. Go ahead and leave us a comment, like our channel. We'd love to get feedback from you. And down below, as you know, our phone number and our email address is there. We've been getting a lot of people reaching out to us, so please feel free to do so as well. So Bret, let's get into it. Let's just talk about what it takes to get pre-qualified for a loan.
Okay, so mortgage reform took place end of 08, 09, and since then it's been pretty consistent. Used to be if you could fog a mirror, $500,000 is yours, right? Not the case anymore. So some of the general things that you need to prepare for, start getting your documents and everything in order and in queue, because the first time you speak to a mortgage lender, they're going to ask you for these things and probably a couple more.
Right.
So
we're warning you. Okay.
Yeah. So 2 years tax returns, 1040s. 1099s. If you're self-employed, you're going to need a lot more than if you're W-2. If you're a salary person, it's the easiest. If you're salary plus commission, a little bit more difficult. They need a longer track record of the commissions to actually factor that in. Or bonuses, same thing. And then if you're like us and you're self-employed and you're 1099, they're like, it's a lot.
Glad I bought a home a few years ago.
So your tax returns 2 years at least. Sometimes last for YTDs, year to dates. If you're self-employed, so then obviously they're going to look at your credit report.
Yes.
They're going to look at it a couple times throughout the process. Initially to get the pre-approval going, and they usually, your pre-approval letter is usually 90 days, 120 days, and they're going to take a peek at it again once underwriting starts, and then take a peek at it again.
So don't go crazy out there, folks. And we are going to be going over a list of do's and don'ts, right? Once we get into it.
All your financial statements, any money that you're claiming that you have, no mattress money. No mattress money. Yeah, so if you have 10 grand under a mattress, first of all, tell me where you live. Just kidding. Don't do that. Comment below. Tell us where it's at. No, just kidding. So if you have mattress money, the bank and the lenders are going to look 60 days, two cycles back. And if they see a $500 deposit, a $5,000 cash deposit, I mean, warning bells, right? You're going to have to write a note. You're going to have to sign
to justify
fingerprint, blood. You're going to have to tell them where you have to source that, right? They don't want ill-gotten gains or any money, even if it was money for a graduation present or, someone lost a bet, or you won your fantasy football league like I did in 2021.
Okay, Bret.
2020 actually was December 28th. I'll never
forget.
It's
good to be
been 13 years. I've never won anything. Anyway, so you will have to source your money. So if you're saying, hey, I got this IRA, this 401k, and I'm going to pull some money from that, cool. This checking account, this savings account, this account, any money that you're claiming, you have to give 60 days, 2 cycles, and then that's going to be under audit for the entire time of underwriting. So sourcing your cash, your reserves, your down payment, your closing costs. Obviously, ID, driver's license, all that cool stuff, passport, whatever. You're also going to definitely have any of your W-2s, pay stubs, not W-2, W-2 is going to be kind of your schedule of payments, but your pay stubs for the last couple of months or whatever way you're paid, whether it's online or you have the actual stub and you copy them, they're going to ask for proof. They're also going to verify your employment with your employer. So HR, please be ready to take that call. They're going to verify if you're renting. They're going to verify your residence. They're going to verify that you've paid in full, that you've not been in arrears. They're going to get a verification from your rental, your landlord, or your property management company, or your apartment complex front office. So prep them for that as well. So they're going to ask for a lot of stuff, and that's just basically the basics of your credit, your job, then your stubs. They're going to want to see that, your credit. Those are basically the cornerstones in your statements, your financial statements. Those are going to be most of the things they want to look at right off the bat, and they'll probably ask for more stuff.
Absolutely. That just gets the ball rolling is what you're saying. And most lenders, and if you don't have one, we have a great pool of lenders that we could refer you to. Most of them have a way that you can apply online, right? So you can kind of do it at your leisure, but it's something you want to get done up front, because when we're ready to hit the ground running and we want to go look at homes and you're like, this is the one, we want you guys to write an offer for us, and we're gonna be like, great, we have to have a pre-qual letter in tote.
Exactly. And like Amber said, do it. So from the day you get your first mortgage application pulled, your credit is run.
Yeah.
You have what, 15 days roughly? I've heard 15 days. I've heard 20. Whatever.
Err on the side of caution.
You can get your credit pulled as many times as you want. You can shop and talk, but again, you're not really ready to lock in the rate until you have a contract. But it does stand to reason that whoever's in June, this and they're at this rate. And you need to compare lenders on the same day, because rates change hourly and daily.
It's
for
very
sure.
fluid.
So anyway, if you want to get pre-approved in June and you're looking to buy at the end of the year when your lease is up, or where you're moving down from another state or another city, it never hurts to get your application looked at months in advance. Why? You might be at a 705 credit score, and the lender says, hey, if we can get you up to 740 in the next 4 months, and I think we can, based on what I'm seeing, you're going to qualify for this, or mortgage insurance is a lot less, or there's any number of things that could be that it's always advantageous to have a higher credit score.
Right, gives you more buying
to be tier
power.
one. Yeah, and definitely it'll be, if you're not putting down 20%. Mortgage insurance is very sensitive to credit score. In the private markets with conventional, credit score is everything. So it never hurts to get looked at sooner rather than later. And then if you say, hey, I do have some cash from this, or from I graduated college 6 months ago, and I just have they might say, well, let's get that cash into your account now, so that 4 or 5 months from now, we're looking, the balance will be higher and we won't need to be worried about that. So always have that conversation with the lender sooner rather than later. That is the best advice we can give. And just have all these documents start getting more and more organized. There will be multiple clarification letters that you have to write. And again, might be a pain in the butt to be doing these things, but this is what's going to keep your home value elevated in an appreciating nature, because when they're just giving out loans to every Tom, Dick, and Harry, and then these people are walking away, take my keys, I don't care, and these banks are foreclosing like in 08 and 09.
That's true.
You look down your street and there's 3 foreclosure signs because they were doing these ninja loans, no income, no job, no asset loans. That's what's tanking your home value. So it's a pain in the butt to do all of this, but they're making sure that qualified people are getting into home mortgages, and that's why we have a healthier market. There's not as much underlying toxic mortgages right now. In the Houston market, less than 0.5% in 2021 is distressed properties.
Right. So we're grateful for mortgage reform.
Whereas 40% in 2008, 9, and 10, you have 35-40% of homes on the market were distressed, either short sale or foreclosure.
Isn't that when you started in real estate?
Yeah, right when I did. Yeah, September 15th, 2008. So that's kind of the background on what it takes to get a loan, and what's to be to prepare for. So let's do a little fun little game.
Okay.
Let's do some do. Since I'm the do guy, I'm the doer, and you're more the mom. The don't do this. Let's go over a few do's and don'ts when it comes to getting a home loan and in preparation and while you're in underwriting. So do stay current on all your payments and all your revolving debt. Do not be late or in arrears or miss a payment on a credit card, on a car note, on anything. Don't be late. Make your payments on time.
Oh, you said don't. So you turned yours into a don't.
I say do stay current.
No, I know.
Don't mess up.
Well, you covered my don't.
Yeah.
Okay. So
auto pay is your friend.
Yes, absolutely. So what you don't want to do is apply for any new credit cards whatsoever. Do not open up a new line of credit. That is no bueno.
And don't even go to Ferrari and get your credit checked, or Mercedes. They're like, hey, why is Porsche running your credit?
I like where you're going here, though, Bret.
No new lines of credit, no new inquiries, even, in my opinion.
Yeah.
I'm sorry, I was on the don't side.
Okay.
Continue to use your credit cards and your lines of credit consistently, unless the lender says, that's our caveat for everything, unless the lender says otherwise.
Very good.
Unless the reputable lender says otherwise. Continue to just try to keep it's not making waves is the key to the game. So continue using your cards and your credit the same way you do. Any big expenditures, obviously drop a text, group text your agent, your lender, say, hey, I'm thinking about buying $3,000 worth of furniture. for one buyer, the lender might say, yeah, easy, you got plenty of money, that's fine. And then another buyer, they're like,
Right.
oh, whoa, no, that'll tank everything. Don't do that. So
Right.
you can always double check, beforehand. Once it's done, it's done. So just continue to keep things as normal as possible, especially where your credit's involved.
Okay, now the don't. Do not co-sign for anyone or anything. So I'm thinking of one of my sweet teenage sons. I said, Mom, can you co-sign for a brand new car? If I was in the market for a house, that would have been a big NO. So sorry for all the kids that might be out there watching where you're like needing your parents to co-sign. Let your parents get into a home first, and then you can co-sign away, right? So that's the don't there.
You're not going to co-sign that boat that I want, that 40-foot boat?
Not even for my sweet
Oh,
brother. Sorry,
okay.
Bret.
Good. Maybe you might be refined. Okay. Also, tell the lender if there's going to be any job or income or significant life change.
Yeah,
so
that's good.
It's best to keep consistent. Don't make waves. If you're changing jobs, like let's say you're the number 2 at a car dealership, and then this comes back to, let's say Lexus, right? You're the number 2 guy at Lexus. Mercedes-Benz offers you the GM spot at another dealership, and you go to number 1 over there. Not as huge a deal. You're in the same industry. But still, they're going to want to see either an offer letter if you're salary, and if you're any kind of combination of salary and bonus or commission base, they're going to want to see a 30-day run, so that way they can proportion out what you make in a year. If you're salary and you get a new job and it says $200,000 a year with these benefits, that offer, and you're paid salary only, a monthly draw of exactly identical, I think they can go off of the letter or at least one first pay stub. But if they're trying to factor your debt to income ratio based on how much money you're grossing a month, and there's commissions or anything sales related in there or bonuses, they're going to need to see a 30-day run.
They need a track record.
Correct. So again, if you go from, say, I don't know, I make $75,000 at Memorial Hermann, I'm a radiologist, or I review x-rays, and I'm this, your title's this in the medical field. You're like, cool, hey, I'm changing my job, Miss Lender. Like, oh, what hospital are you gonna work at now? Like, no, I'm a sous chef now at Del Frisco's. They're gonna be like, whoa. You went from reading x-rays to prepping soup and, like prepping jumbo lump cocktail, or like, what? So they're gonna have a problem with that. That's a different industry. Again, have that talk with the lender before any of these things actually come to pass, or because once you do that, it's too late. So significant life changes, income, job, talk about it beforehand, right? Or else there could be problems.
I like how you worked food into that.
So yeah.
You know how we roll every video. Okay, right? So what you don't want to do is increase your credit obligations. So we kind of touched on this. Don't go get credit cards, and don't just start going on a shopping spree, right? You can go to Neiman's and all your favorite places after you buy a home. Not that we're really recommending going into debt. We would never say that. But please do not be charging $3,000, $5,000, $10,000, $20,000 on credit cards, or taking out other lines of credit. It's just not good. You want to remain stable and consistent and steady. Okay?
Okay. Also, please let us know, mainly your lender, but if you're like, hey, I know when I saw my credit report last month, or you can check it yearly, and maybe you looked at it, or the lender, and you talk about it, and you look like, oh, that new line of credit that I opened hasn't hit yet, or this hasn't happened, or my college loans are going from 0% to now they're Fannie Mae or Sally Mae or whoever does, they're going to start charging 7% a year now because I just graduated, and now I'm in the labor market. Anything that's not posted and is about to come down the pipe, talk to the lender. And they don't want these things to come, but I mean they're obligated. If it's visible and it becomes apparent and it's before closing, it's factored in. So get out ahead of it. That's, get out ahead of it. Talk to your lender. Over communicate. That is, over communicate with the lender, and always ask if it's something stupid or minimal and you think, oh, it's gonna be, no, ask first.
Very good. So this next one might be a little counterintuitive, especially for someone like me, because I don't like owing anything to anyone. So my first inclination might be like, oh, let me go close this account. Let me pay this and this and this and this off. It actually could work to like a negative, it could work in a negative way. So you want to, again, consult your lender, make sure that you ask permission before you do anything. Again, it's about slow and steady, being consistent and steady. When they start seeing drastic measures being taken, like closing all this, doing all of this, it can actually raise some flags. So we don't want that to happen.
Yeah, if an account's in collections from a 10-year-old electric bill from when you were in college, everything's about college. You think, oh, I'd rather just pay that off.
Right.
And it closes the account for some. It reduces your obligation for the collection, but it might knock your credit score 10 points for some reason. And if you're right on the fence with your credit score, again, don't do anything until your lender okays it. Right. So that's a don't. So negative. Just kidding. Okay. So your last do. If you are getting a gift for your closing costs or down payment assistance, communicate that with the lender up front. They'll have a template, they'll have a Word document that basically kind of gives an idea of like, hey, I'm Amber's dad or Amber's mom, and I'm going to give her $10,000 towards the purchase of the property on 1234 Main Street. Obviously, gift, right? If you are going to pay it back, that is the lender, and we don't want to hear about that. It has to be a gift letter. Okay, any other arrangements outside of that is not part of the transaction. And I have learned recently it needs to be from a family member, and it can't be from your fifth cousin or your godparent. It
like
needs
this
to be,
guy right here.
It needs to, yes, I could gift Amber, even though she's not more money than me. I could gift her money, but if she was my cousin, they would not look.
Good thing I'm your sister.
Yes. So sister, brother, father, mother, I don't even think aunts or uncles, right? So have that conversation with your lender, direct family member, gift letter, and they need to also, it can't just be 10 grand given and that's like, oh, cool. That person that's giving it to you is also going to have their accounts sourced. Because if I had $10,000 mattress money, I could say, Amber, here you go, put that in your account and donate 10 grand to me. And then all they see is 10,000 being given from Amber to me. They're like, okay, cool, good story. Let's see your checking account history the last 60 days, just to make sure no mattress money was given. Sourcing, seasoning of funds, all kind of the same thing. Sounds like a don't, right? But that was a do. So communicate with your lender about any gifts that are going to be a part of the transaction if you're getting help with your down payment or closing costs.
That was very good. Okay, so the last don't. Don't start disputing anything on your credit report. Again, it seems a little counterintuitive because you might want to be like in cleanup mode, right? Like, I can fix this. Sometimes if something has been on your credit report for a while, you almost can reactivate it, right? And start raising a flag that way. So again, talk to your lender, but there's a lot of companies that do specialize in credit cleanup. And I know a lot of our clients.
We have a great one.
Yes.
That won't keep you on the dole and the hook for, just one more month, and they get these $200, $300 months. Like, no. We got very targeted people, credit specialists, and your lender's going to have them too.
Exactly.
A lot of times it's not rocket science, but if sometimes it will need that specialist, and they're worth their weight in gold. The good ones are.
Yes.
So we have that referral, and most likely any reputable lender that you're dealing with should have those as well.
So if you need that referral, reach out to us. And again, if you already know there's issues potentially with your credit, that's another reason why you want to get started in this whole process earlier, so that when we really do find your dream home, we're not going, oh man, we can't get, because in this market right now, we have to move quickly. And we don't want to be like, oh, sorry, we didn't get,
Side note, bonus tip, even if you're not using us or lender that is just top notch, when you submit an offer, you need to have that lender on standby. Whenever we submit an offer, we text our lender. We say, hey, Susie Johnson is the listing agent on the property for Mary and Marcus, our client. We just submitted an offer. If Susie, here's her phone number, she'd probably be calling you from. We text that to our lenders, and we say, if they call you, speak to the creditworthiness and the strong candidacy of our buyer. And when that lender answers on the first ring, says, hey, Susie, like, what? Yeah, you're calling about the Johnsons, right? Yeah, they're solid.
Right.
We're going to smoke this file. They have great credit, great income, all these things. We've already checked it all. Accept them and feel free to call me anytime. We'll communicate with you. We'll keep you involved in the underwriting process. We'll give you waymarks. We'll give you, we'll update you like all throughout the process. And that's everything. Because we could be the best agents in the world, but we don't have $250,000, $500,000 to loan you. So the lender is integral.
Not yet, at least.
The lender is integral. You do. The lender is integral in the process of getting it from contract to close, which is that's
a really good point,
Yeah.
Brett. Especially when we're representing the seller, these are the things that we look for in a potential buyer, because we're looking out for the seller, we're looking out for our client, and we don't want to accept an offer from a weak buyer. That's just not gonna happen.
Yeah, XYZ lending. You look on Google Maps and it's next to a 7-Eleven in a strip center. Ain't happening, right? Next to it's a gold and silver pawn shop.
Okay, so you probably get the point here, right? So hopefully,
reputable lender.
Yeah, there you go. So hopefully you found value in this video and the content. We'd love to hear your feedback. A lot of what we shared will be down in the description area below, alongside our phone number and email. Please do not hesitate to reach out if you have any questions. We cannot wait to speak with you. See you next week.
Thank you.